Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you Morning Call Express. So last week, of course, markets saw one of their worst declines in 4 months. We did get a rally yesterday, so does that mean that the rally could be back on?
It just means that you have to know what time frame you're trading and your levels. You know, any time that the market goes down the worst amount in 4 months, it's always a good time to cover. Doesn't necessarily mean it's a time to buy, but you combine that with the test of the 50-day moving average like we saw on Friday, and then you saw the positive action like we saw in the banks on Monday. You know, you put it together and you put some feelers out and get long. And then yesterday we had a nice snapback. Now the question is, can we see commitment to that snapback?
So what are the key levels that you're watching the S&P right now?
Well, let's go to the chart. Let's go to the macro and micro version. If you take a quick look at the S&P, you will see, again, as far as from the October low over a year ago, we've been methodically moving higher with a lot of trades along the way. You want to take a closer look right here to see what everyone was worried about, which made sense, okay, because here you had this accelerated trend that the bulls were a little spoiled about that broke. And then, but what did we hold? We held this macro trend, the macro trend that's been in place since June 4th. You could also go back and look, take a look at where we tested. We tested the breakout point. Remember this breakout point? This was the prior high. This is where we broke out from. On the ECB, we came right in and held. So the question is, can we start going through resistance? Do the bears have any power to contain this move to the upside? So I do think that the next area of resistance I'm going to watch, that the easy portion of the bounce will be over, will be somewhere around 1445 to 1448. This is day one. We're opening up. We start taking back any more than this, I think the bears are definitely going to start sweating a little bit.
And financials have been acting well. Banks had a gain of over 1% yesterday, of course, helped by Citigroup, and we have Goldman out impressing this morning. What do you think about the financials right now?
Well, on Friday, you saw JP Morgan and Wells Fargo. It wasn't enough to keep the rally going, but they didn't fall apart. And then you saw Citigroup come out on Monday, and they tried to sell the market lower. They tried to sell Citigroup, and once they couldn't, that's what helped ignite the move. So if you look here at Citigroup, unbelievable move. We've talked about some of the strength coming back. Here was a buy area. Here was another. Citigroup closed at monthly highs yesterday and is opening up, so it's showing you strength. So as far as the numbers from Goldman today, I do think that they came in really strong, but I think at this particular point, it's already at highs. It might have a lot priced in. I wouldn't be chasing it here. I think it's down maybe 0.5%. So I would say, as long as Goldman holds, just say this 120 area, it's fine. But I also think even if it comes in a little bit more with the dividend they just increased, I think that Goldman Sachs will be a buy on dips, and the banks are going to be a place to be in the fourth quarter and the first quarter of next year.
And we did have an outside day for the Qs yesterday. Now, this could be a bullish sign for a group that has seen a lot of selling pressure. Look at Apple closing at highs yesterday.
Yeah, so if you take a look at the Qs, you'll see that it did break the 50-day first, but then it found support with the market. So if you go to the Qs, you know what, why not test a little bit? Here is your head and shoulders top. This is when it broke the 50-day. Yesterday, it held the prior lows or broke below, came back above. So, it has some room to potentially bounce here. If you look at Apple, Apple held the 100-day. I think it's very important. Okay, first of all, I would love to see Apple get away from this area, get out of the danger zone. Right now, a lot of traders like myself are trading at verse 623. I'm long some. If it could finally break and close above the 8-day, I think that would be, a bit constructive and healthy. So I think it's got to start getting above 640 and get away from here heading into earnings, because I think a lot of people know or think that the third quarter is not going to be good, but the fourth quarter could be blockbuster. So that's the push-pull we're playing with Apple there.
All right, and we're going to be diving into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.